In this video, guys, we're going to look at cutting a losing trade quickly. What does it really mean? Stick around. Hey guys, very warm welcome to you. Thank you for joining me. Okay, so cutting a losing trade quickly. You've seen it in all the books, you've heard people talk about it, but what the heck does it actually really mean? So what it doesn't mean is this. It doesn't mean that as soon as it goes into loss, you cut it. It doesn't mean that at all. It doesn't mean that you're like, okay, market's going against me, it's a loser, I'm going to cut it straight away. It doesn't mean that you don't give a trade no room to breathe. You're very rarely, because if you think about what you're actually asking then, you're actually asking the trade to literally go in your direction the moment you buy it. So let's say you go long here, you're asking for it to go straight away in your direction. That doesn't always happen, guys. In fact, you've got to expect it not to happen. It'd be nice if it does, but it doesn't matter if it doesn't, as long as we don't get stopped out of position, as long as our stop's in a sensible position. So this is not what we're looking for when we say cut a losing trade quickly. You know, you sometimes may have to expect the market's going to go against you for a little bit, but this is where the sweet spot comes in. And guys, I know this is not a black and white answer, and it's never going to be black and white. Trading is not black and white. What you're trying to find with the most optimum kind of trade is to have a trade that has some opportunity to kind of make a little bit of noise, do its thing, maybe oscillate around and then go. You know, you've got to give it some time and you've got to give it some price extension as well. So you've got to give it some price adverse excursion, and you've got to give it a little bit of time. Now, how much you give it is up to you with your time frame, and also what you perceive the risk reward ratio of the trade to be. Now, if you're just going for a quick day trade, going from kind of here to a gap fill, for example, the gap fills, you know, let's use it down, let's say it's, I don't know, 100 points away, and you've got a kind of 25 point stop on it. You know, if it's sitting there and it's going lower, and it's grinding lower, and it's grinding lower, and it's grinding lower, it's grinding lower, you don't want to take the trade. If, however, you had a longer term target of 2,000 points higher and the market's maybe going lower, going lower, going lower for a few hours, then that's different. You're okay to take it. So really what you really want to do, and talk about stops then, we talked about stops then, so while we're on that position is, you know, don't allow a losing trade to go further than you planned. That's the stop loss situation. You know, if you've got a stop loss in and you pull it, that's cardinal sin, guys. You know, removing that stop is dangerous, because you're then saying, I don't believe what I said in my plan is correct. I think I know better now when I'm under the pressure and the moment and I'm emotionally involved in the trade. And you know that's not the case. You know that's not the case. So, you know, honoring your stops is a big part of this. But at the same time, if your stop's ultra wide and the market hasn't quite got there yet, it's sitting in no man's land, it's up to you to decide, okay, well, how long am I going to give it? You know, if it's that analogy we used before, like a gap fill in the day, am I going to give it 20 minutes? Am I going to give it an hour? About 3 hours, 4 hours? How long do I give it before it starts going? And that's about cutting the losing trade based on the premise you've got for taking the trade. So we're not just cutting it straight away, but at the same time, you know, you might want to give it a little bit of room. Another example, if we're taking, let's say we're taking a good pullback type trade, a flag, and then you're taking the trade there. Now, you'd want that. The premise of the trade is momentum, okay? It's a momentum ignition type trade, bang. That's what you're looking for. If it's kind of sitting here, going lower, taking a lot of time, that's the whole thing around cutting the losing trade. That is now a losing trade. Yes, it may well go higher later on, but the premise isn't valid anymore. So the key to this, guys, is to have a premise at the beginning of what you're expecting or what you would like to see from the market, and then getting involved with the trade and then seeing if the trade is acting in that environment, or is actually planning, or is actually kind of resolving in the way that you'd planned or hoped it would plan. And if it doesn't, then that's the point where you go, you know what, it's a losing trade now. It hasn't worked. It hasn't been quite as much momentum as I expected it to be. I've given it what I consider to be enough room. I'm cutting it. And if you've got a swing trader as well, that was the kind of day trade analogy. If you're a swing trader, it's trimming those positions from your portfolio that you've given chance. So, you know, higher time frame with this type of stuff. You've had something, you've traded a flag, it's now just sitting there grinding low. Maybe you've got a stop. Again, we're not violating the stop here, but let's say it's further away, hasn't hit it, it's grinding low, it's sat there, volume's died off. The premise of the trade was that you were expecting momentum to kick in again after the next day or something like that. it didn't do that. So at some point you go, okay, it hasn't done what I thought it was going to do. Trades don't always do what you think it's going to do, but you've got to give it a little bit of leeway, but at the same time, not enough for it to completely negate the reason for the trade. Because if you're holding this trade, it's going lower and lower and lower and lower, and then eventually tickles up and makes you a profit, that's okay from a P&L perspective, but the idea, the theme was completely wrong. And if you're constantly trading themes and ideas that are wrong, you're going to struggle, because you're going to be in this awkward position where things aren't doing what your premise isn't coming true, the market's grinding lower, you're stuck in these multiple positions that you thought were momentum, hoping that actually they come back and tag the high, and you get a lot of hope in it. So the thing about cutting losers, guys, is to have a kind of plan of action. I'm always a big fan of trading plans, but have a plan where you go, okay, this is what I'm expecting from the market. Now, it might not be 100% right, I might not get it straight away and it rips up. It'd be nice if it does, but it might not. However, if we have more than 4 days, for example, or more than this distance from the high to low, then I'm gonna cut it. And so if you have that idea in your mind that this is when I will cut losers, this becomes very simple to kind of run with. You're like, okay, I'm going to cut losers under these conditions, otherwise I'm going to still give them a chance to mature. So don't be too brutal, but don't take it too literally, like, oh, it's gone against me straight away, I've got a negative position here, I need to cut it. That's not what it's about. But if that position hasn't done what you want and you feel like you've given it enough time to do that, that's when it's time to maybe move on, cut the position, look to the next trade, because the opportunity cost, the focus costs, all this kind of stuff just ends up getting eaten up. So fine line, guys, it's a balance, but that's for you as a trader to kind of work out and get that sweet spot right for you. Take care, guys. See you in the next one. Bye-bye.